Stop everything. Because if you're thinking about buying a home and your number one focus is getting the lowest interest rate, you're falling for one of the biggest financial illusions in real estate. Here's the truth. The lowest rate doesn't always mean the best deal. Yes, I said it, and let me say it again for the people in the back. The lowest rate doesn't always mean the best deal. Now, I know this goes against everything you've ever heard. The ads, the headlines, those special offers that promise you rock bottom interest rates. But today, I'm going to show you why focusing only on the interest rate could actually cost you way more than you think. Welcome to episode 206 of the Martini Mortgage Podcast, which is called The Interest Rate Illusion: What Really Matters. My name is Kevin Martini, and by the end of this special episode, you'll know exactly how to spot the difference between a really good deal and a sneaky lender trick designed to get you in the door. Now, before I start, I need to make those legal folks happy, so I am Kevin Martini, a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, equal housing lender. This podcast is here to inform, educate, and entertain, not to provide legal or professional advice. So, if you are serious about buying a home the smart way, stay with me, because this is need-to-know stuff. Even if you see a lender advertise a ridiculous low rate, like get a 5% rate today, when everyone else is offering 6.75%. Sounds amazing, except it's not. What they don't mention in the fine print, the real cost behind that flashy number. That 5% might come with hefty upfront fees, maybe require a massive down payment. Maybe your credit score has to be so high, it needs to be in the top 1% of 1% to qualify. And then there are hidden points that add thousands to your closing costs. So while the low rate looks great on paper, it could actually cost you more over time than a slightly higher rate with better terms. This is how lenders get people. They dangle an unrealistic rate in front of you, knowing that most buyers won't qualify for it, but they do it just to get you in the door. And once they have your intention, that's when they hit you with, "Oh, you don't actually qualify for that rate, but we can offer you this one instead." Does that sound familiar? So if the interest rate alone isn't the most important thing, what is? Simply put, the total cost of your loan over time. When you focus on the rate, you're missing the big picture. Things like the loan structure, the fees that are attached, the flexibility of your terms, how quickly you can build equity. So let me just give you a real-world Kevin Martini example. Say you get two loan offers. Loan A, a 6.5% interest rate, minimal fees, lower cost. Then there's loan B, 5.99 interest rate, but it has $8,000 in extra upfront fees. If you're only looking at the interest rate, loan B looks like a better deal. But when you break down the real cost, loan A saves you thousands of dollars over the next few years. This is why smart buyers don't just chase the lowest rate. They look at the total cost of the loan and how it fits into their long-term goals. Let's shift your mindset for a second. Instead of asking, "What's the lowest rate I can get?" you should ask, "What's the best mortgage strategy for my goals?" Because here's the truth. The lowest rate with the wrong strategy is more expensive than a competitive rate with the right strategy. Strategy makes all the difference. And here's 4 reasons why. Number 1, strategy allows you to choose the right loan type for your situation. Strategy allows you to structure the transaction in a way to maximize your savings. Strategy allows you, for number 3, to understand when to buy down your rate and whether it should be temporary or permanent. Number 4, strategy is having a plan for refinancing when the time is right, even though you haven't even closed yet. These are the things that set apart a financial savvy homeowner from people who just chase headlines and end up making a costly mistake. And if you're working with the right lender, hint, one who actually educates you instead of selling to you, they'll help you build a strategy that works for you in the short term and the long term. Let me let you in on a little secret. The smartest home buyers right now, they're not sitting around waiting for interest rates to drop. They're getting in the market strategically, and here's how. They're securing the right mortgage now while home prices are stable. They negotiate seller concessions to reduce their upfront costs. They use a temporary buy-down strategy to lower payments in the first few years. And they set themselves up for a refinance later when rates inevitably will drop. And that's how they win. Because while everyone else is waiting on the sidelines, hoping for rates to magically drop to 3%, spoiler alert, that is not going to happen, but rates will go down. But the buyers that are waiting for them to go down are waiting for the wrong reason. Right now, when rates go down, they will be sitting on the opportunity to pay more for the exact same house. But strategic buyers today, when rates go down, they'll be sitting in a home with built-up equity, ready to refinance for an even better deal. Let's talk about the mistake I see way too many people making right now. They're waiting for rates to drop, waiting for home prices to crash, waiting for the perfect time to buy. And what happens? Home values go up, affordability gets worse, and they miss their window. Look, I get it. Nobody wants to overpay. But the people who win in real estate, they are the ones that make strategic moves instead of just waiting for the market to hand them the perfect deal. That is why I say, marry the house, date the rate. Find a home that fits your needs and budget now, then refinance later when rates improve. And here's the reality. Mortgage rates are cyclical. It's not a question of if they will migrate lower, it's a question of when. When mortgage rates drop by just 1%, 5 million more buyers enter the marketplace. Because you see, 5 million more people are able to afford to buy a house when rates drop by 1%. More buyers means tight inventory. What happens next? Higher home prices. If you wait too long, you might find yourself priced out completely. All right, so now you know why the lowest rate doesn't always mean the best deal, how lenders use that too good to be true rate to lure buyers in. What actually matters is more than your interest rate is the cost, and how the smartest home buyers are playing the market right now. So what's next? Simply put, you need a game plan. And that starts with getting clarity on your numbers. My name is Kevin Martini, and I'm not just a mortgage broker. I'm a certified mortgage advisor who takes a fiduciary approach. That means your best interests are my only interest. I invite you to reach out so we can create a rock-solid strategy tailored to your financial goals. I'll help you understand what you can afford beyond just the interest rate. I'll help you get a same as cash approval package so you can move fast when the right home comes along. This isn't just a pre-approval. It's a real plan that sets you up for success. Call me at 919-238-4934 and let's talk strategy. Because the smartest home buyers, they're the ones who take action. And I want to help you be one of them. Thank you. Thank you for tuning in to episode 206 of the Martini Mortgage podcast called The Interest Rate Illusion, What Really Matters. If you found this helpful, don't forget to like, subscribe, and share this podcast episode with someone you care about that needs to hear it. Remember this, homeownership isn't a dream. It's a strategy. And the right strategy, we can make it happen.